that Motherson Sumi has announced a mega acquisition. It is going to buy Finland's truck wire maker PKC Group for a massive $609 million. As you can see, that stock is up 1%. Vivek Chaand Sehgal, the chairman of the company, is with us right now on the phone line. Congratulations, Mr. Sehgal, on the acquisition. How will you fund? It's fairly large. Will it be through debt or will it be through internal accruals?
We just done a QIP and an allotment, so we can take care of the entire transaction by ourselves. So we don't really have to raise any further capital or anything like that.
Okay, will this acquisition be EPS accretive in year one itself?
I think what's going to happen is, this company is a profit-making company. It definitely, I think, will be EBITDA accretive and EPS accretive in Motherson. So we're very, very excited by this particular thing, because this puts us in the right place where we want to be. PKC is a very well-respected company. And I think, Sonia, what's important is that Motherson has taken 34 years to come to about 830 million euros. And this company is about 850. So actually our wiring harness is going to double. So very, very excited by this whole particular.
Okay, Mr. Sehgal, good morning. So what's the total amount that you're investing? And after this, how much cash are you left with?
Well, it's too early to give all the details over there, but approximately 580 to 600 million euros is the deal amount. And we have very strong cash accrual, so we are not worried about it at all. We've got about 370, 380 million from the QIP, and the balance is all available with us.
Okay, well, this company has had revenues of 800 to 900 million euros over the past 3 to 4 years. What could the revenue growth trajectory and the margins for this company be over the next 1 to 2 years?
I think the key point is that, in wiring harness business, and especially in the CV segment, this company has a major exposure to the U.S. CV market. So, as you know, that is at the moment a little bit depressed or something like that. But with the new presidency coming in and the impetus on manufacture in U.S., we are sure that the commercial vehicle market is going to do very well in U.S. as well. So the growth will come naturally from there. But the key point is that it's very difficult to get into the CV market unless you already have an existing particular supply this thing. So for Motherson, we are already doubling up our turnover. And together, where we are strong and they are weak, and where they are strong, vice versa, we are going to see some very, very good growth that comes in. The margins and things like that we don't guide on, but the ROS, definitely we will improve the ROS from currently where it is to our target of 40% ROS.
The ROS, I assume you mean the return on capital employed. What is it currently for the PKC Group, and how much can you grow it to?
See a huge scope, taking it from 6.5, 7 to 40%. So that's where the real this thing is.
Okay, last question then. For PKC Group, can the margins scale back to the level of 9% that it had in 2012 versus current 7%?
It should do much better than that as well. But I must advise you that, it's a public limited company, and we are not privy to all the details inside the company. So we are also dealing with a company which is in public domain. Whatever the information is in public domain. So I think once we go inside the company, we take over the company, go inside the company, we'll be much more better advised to be giving you how we are going to take that. But we believe it's a very strong company, a very strong, it has a long history, and it's going to do very well, because wiring harness, Motherson is very strong in wiring harness. It's our backyard. You remember 3 years ago we took over the wiring harness division of Stone Ridge, and despite a the number at that time I think it was about 300 million. We have lost I think about 40% of the business on the top line because of the slowdown in CV. Yet it's a profit-making company. In the 7th month, it was making profits. Well, at 300 million, it was making losses. So we are very sure that we can be in a position to use our experience and our know-how to improve it even further than 9%.
All right. Now, that's a big jump you are expecting from the new acquisition. Mr. Sehgal, it's always a pleasure speaking with you. Thank you very much indeed